Yes.
What do you mean by there being potential in the waste rock?
So our economic pre-feasibility study, a permit to mine, a plan of mining that's in all our presentation materials, it works along the assumption as it would any other mining operation. That is, we go in, we blast, we dig a hole, we crush, grind, float out our dry concentrate that we ship off site. We dry stack our tailings. We use waste material to buttress those tailings. Then post-production, and then we have two piles of waste rock. Post-production, we grind up some more of that material. We cover the waste rock with what's called riprap, which is finer, coarse aggregate. And then ultimately we topsoil and we turn it back into topography. And some of the rock goes back into the pit. Some of it is left on surface and topsoiled. So that is exactly how it's priced out and planned in our permit to mine. However, as we were doing the engineering around the project, we were looking for borrow source material. What's that for? Well, we need to put in foundations for our crushing plant, for our recovery plant, all the different work, road base, etc. So we decided we should run some tests on our own rock, because why go buy it? We're mining and harvesting rock anyway. Let's take a look at what our rock's like. And people think, well, why would you have to test it? Well, it's a sulfide deposit. And what the last thing you can have is acid rock drainage. You can't have acids and sulfides leaching out from the rocks into Mother Nature, into drainages and different things. It's just, obviously, that's why we do environmental assessments, etc. Well, it turned out that our waste material is a very, very high spec aggregate source. And again, so we look 3 miles to our south, and there's Martin Marietta Materials, a $40+ billion materials company, pumping out a very similar granodiorite to our waste material and selling it for $20 to $25 a ton into the Colorado Front Range and by rail on Union Pacific Rail that follows the I-80 highway that they're located on. So then we look back and thought, well, we have 40 just within our mine plan, not considering the fact that the mine is going to last longer than just our feasibility study indicates, because we've discussed that, of course. It was just constrained by the amount of money we wanted to spend, not by the actual geology. So when we look at it, though, under that just 10-year mine plan, there's 40 million tons of that material sitting on surface for free. So we've got 40 million tons of $20 rock sitting on surface for free. So our intent now is to canvass some of the larger materials companies, construction companies. We've already been approached by one of the largest railways in the US wanting to purchase that rock. And we want to actually partner up with someone and say, look, you guys can have the rock. Why don't you do the contract mining and give us a huge discount on delivering us ore? Bring the cost down of production even further. I mean, all-in sustaining cost at $2,100 gold, as you know from our pre-feasibility numbers, is a very low $950 approximately an ounce. It's extremely low relative to peer group, right? Well, we believe we can bring that number even lower just by sourcing out, selling, horse trading our waste material, which is, again, highly sought after. Why is it highly sought after, by the way? Because one would think, oh, there's lots of rock on the whole world is just a rock. You can't dig a hole in Colorado anymore because of their political system. You can't dig a hole in California. You can't dig a hole in Oregon. It's very, very tough to build a quarry these days. And we just, by de facto of our permit to mine, have an entire quarry component to it.